Hi, this is James Shrug with Westpac London's end of day report for Tuesday, April the 24th. Positive day today on equity markets, a bit of a return of risk appetite. In Europe we saw some reasonably well supported T-bill auctions in Spain and the Netherlands, two countries that have been particularly in the news of late, of course. I think the Italians had one that went off okay as well. The earnings reports that we saw out of the US were mostly positive today, and there was some other good corporate news that helped offset a fall in new home sales in March. There were substantial back revisions to the home sales figures, but basically the recent profile over the past year or so shows weakness in the middle of 2011, then about a 20% gain in sales between September and February, almost uninterrupted, but then a 7% fall in March. Now that's kind of consistent with what we're seeing in other data too. A run of decent numbers around the turn of the year, possibly to a greater or lesser extent driven by favourable weather conditions, which meant that activity didn't fall away as much in the raw data, and so after seasonal adjustment it comes through as decent gains. What's happening now with March onwards is that we're seeing the payback. You're not getting the usual pickup in activity because it's already happened, and that comes through as falls in the season adjusted data. So the story isn't probably as weak as it looks in the latest figures, but the strength was somewhat imaginary, or at least as far as the statistician was concerned. So the true story on housing is probably one of perhaps a bit of an uptrend, but nothing like the sort of uptrend that was implied by that 20% gain in sales up until February. But the corporate news was pretty solid today. Actually, in the European market, we had some decent news on the corporate side as well. Other data included a slight fall in consumer confidence on the Conference Board measure in the US. Second month running, it's slipped, but the jobs assessment measure, that is how consumers feel about the labour market, continued to improve, and it's at a new cycle high, that indicator now. The Richmond Fed reported their April factory index, and it rose from 7 to 14, reversing about half of the, or more than half actually, of the March decline. And in fact, the February, March, April readings on that index are the highest since the early part of last year. And some of the detail was positive there too. A very strong rise in shipments, orders are up, and jobs are up as well. In contrast, the Richmond Fed services and retail surveys were very, very weak, but they are less focused, less watched. I think that one of the reasons for that is that they are particularly volatile. The Canadians had retail sales, they were down a bit in February because of auto sales. That was about it on the data front. I suppose the other point to make is that there was just a bit of a bounce after yesterday's very steep losses related to concerns again in Europe, and particularly related to the Dutch political situation. But the bounce didn't recover the losses that we saw yesterday, certainly not in Europe anyway. We saw gains of 0.8% on the London market, the French market up 2.3% today, the Germans up just over 1%, and in Spain and Italy we're looking at 2.2 and 2.5% gains respectively. It's lunchtime in the US, and the Dow is currently up 0.75% at 13,024. On the commodity markets, we've got some gains to report, with oil up 0.4% at $103.56 a barrel. Gold's up 0.6% at $1,642 an ounce, and copper's up 1.3% today. The Aussie dollar took a bit of a tumble on the CPI figures, lower even than our revised down forecast for the CPI. Absolutely no impediment in terms of the inflation story to a rate cut in May. We expect a follow-up rate cut pretty soon after that. And internally, internally we're debating whether to, in fact, put in place even further rate cuts. Certainly the risks to our view that there are 2 more rate cuts from the Reserve Bank of Australia, the risk to that view is that we see even further rate cuts beyond those two. So the Aussie dollar at 1.029 at the moment, tumbled a bit on the CPI, as I said. It's picked up somewhat on today's resumption of risk appetite, but didn't hold above 1.03. At least it was there only temporarily during the London session. That's about it. It's Anzac Day in Australia and New Zealand, of course. Time for a bit of quiet reflection, I think, and I'll come back with another report in about, well, actually, it'll be about 27 hours' time after the Fed meeting outcome is known tomorrow.